everyone. My name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello, Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, how have the markets been moving yesterday?
Well, we had a continuation from Tuesday practically, where the US dollar tended to gain on safe haven inflows due to the extensive market worries for a possible recession, especially in the US economy. But we have to note that they were in a more moderated pace, I may say. But overall, the extensive market worries were maintained, and that may have been the key issue for yesterday. For today, it remains to be seen whether those worries will be extended into today's sessions as well, or whether the market is going to be practically starting to digest the idea and have new views on new factors which may alter its course.
I understand that the Fed's June meeting minutes were released yesterday as well. Any comments?
Yep, the June meeting minutes were released by the Fed yesterday in the American session, the late American session. The minutes revealed a very, very hawkish Fed. It was characteristic that we had practically comments and the idea of another 75 basis points rate hike in July as well were mentioned. So that remains our base scenario for now. I would dare to say also that we would be keeping an eye out next week for the CPI rates of the US, which are due out on Wednesday. Overall, the Fed in the document showed that it's decisive on whether to curb inflationary pressures. And I think that will be the main effort of the bank for the next couple of months. So we would expect practically further tightening of the bank's monetary policy in the coming meetings.
And how did US stock markets behave?
US stock markets seem to show some slight degree of optimism. It was characteristic that all three main indexes, the Dow Jones, Nasdaq, S&P 500, all three of them were in the greens. So that could imply that maybe market participants have started to price in or have already priced in the overall sentiment and are moving away from it, finding new factors moving the markets, the stock markets. I would dare to say that should the positive, more risk-oriented approach be continued, we may see further advances for US stocks.
Interesting. Moving to the precious metals, Peter, did gold price continue to fall?
Actually it did. Once again, though, at a slower pace than, say, for example, on Tuesday. So we may see a slight reversal. Actually, we had a slight reversal already during today's Asian session. The drop of the precious metal was at least temporarily halted. It's going to be interesting to see whether we're going to be seeing gold's price regaining some momentum, regaining some of the lost ground and rising.
And what about oil prices?
Well, oil prices also continue to drop somewhat. Overall market worries about a possible recession, which could drive demand for the commodity even lower, more or less set oil prices under pressure. However, I would once again note that there is always the possibility that the supply side may show signs of tightening, which on the other hand could provide some support for oil prices, and WTI could be on the rise once again.
And what's on the calendar today?
Well, we already had a heavy calendar in the European session. In the American session today, I would be highlighting practically the US employment data. It's before the release of the US employment report with its NFP figure tomorrow. So we may see the markets more or less focusing on today's releases in order to make some expectations about what's going to be released tomorrow. We highlight the ADP national employment figure. It's expected to rise. And if actually so, could provide some support for the US dollar. On the other hand, a slight note of warning here, as a number of investors tend to see the ADP employment figure as a precursor for the NFP figure. That's not always the case. The two indicators are relative but do not measure the same exact thing, so we may see discrepancies between the releases. I would also note the US weekly initial jobless claims figure, which is expected to remain relatively unchanged. It's not exactly positive, as initial jobless claims maintained that level throughout the month. And also in the American session, I would be noting from Canada the trade data. The trade data for May are expected to show a trade surplus which is widening, and if so, that could be providing some support for the CAD. While also I would note from Canada the IVPMI figure for June. And during tomorrow's Asian session, we highlight Japan. We get Japan's current account balance. And I would dare to note that overall the current account surplus is expected to shrink. And that's not exactly positive for the Japanese economy, as it would imply practically that the Japanese economy benefited less from the international payment system.
Have also Euro bears maintained control?
Yeah, the bears for the euro were still in effect. I would note, though, that the situation for the euro does not seem to have any prospect. It's characteristic that a number of analysts have characterized the euro as unbuyable, and that tended to deepen the bearish sentiment, albeit we have to note that the drop as such of the euro against the US dollar was not so intense as on Tuesday. However, that was more due to the lessening strength of the US dollar rather than the lessening of the weakening of the euro. Once again, though, yesterday the euro was the main loser among the majors against the US dollar, so I wouldn't expect the bearish sentiment to end just yet. It may be moderated somewhat during today's American session, though.
And how about the UK political scene?
Well, the UK political scene is in turbulence. We have mentioned that yesterday as well. However, today we had fresh developments. Actually, yesterday we had the fresh developments. And we had, besides the resignation of Chancellor of the Exchequer Sunak and Health Minister Javid, Johnson fights back. He refuses to resign. At the same time, he attacked back by firing Gov. And I would note, though, not only the political scene, I would be outlining also the economic outlook for the UK, which also seems to be darkening. It was characteristic that BOE policymakers made some comments in recent days that they see no potential for substantial growth in the UK economy, while at the same time we have inflationary pressures which are high, and there is a high combination of factors for pound traders to watch out for, as on the one hand we have an uncertainty in the political scene, and at the same time worries for possible stagflation in the UK economy.
Any last comment, Peter?
Well, the market may start pricing in, or at least repositioning ahead of the release of the US employment report tomorrow with the NFP figure. Mind you that the NFP figure is expected to drop. Also, the unemployment rate is expected to fail to drop lower, and average earnings are expected to decelerate. All three indicators could weaken the US dollar somewhat, as there seems to be some stalling in the tightening of the US employment market, something which was also somewhat evident from the weekly initial jobless claims figure over the past 3 weeks. I would also note Canada's employment data for June tomorrow during the American session. Once again, the employment market in Canada is expected to show some slack, which more or less, or at least less tightening, which may weaken the CAD as well. Other than that, I would expect the US dollar to maintain the initiative over other currencies in the FX market. It's going to be interesting to see how US stock markets will be opening in the American session. And I would expect also reduced volatility for gold's price.
Great. Thank you, Peter. And everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of the presentation today. We'll make a start with the dollar index and magnify this a little bit so we can see more clearly. Now the USD index maintained its rise. Actually, it moderated its rise, but it's still edged higher. And let's make the adjustments here. And stop short from actually testing the 107.50. Actually, there seems to be some stabilization near the 106.80 to 107. I would like to see how this plays out, but for the time being, we tend to maintain some bullish bias for the index, given also that the RSI indicator remains above the reading of 70, implying also bullish sentiment. But I would also note that for a bullish outlook to change in favor of a sideways movement initially, I would require clear breaking of the upward trend line, like here. I would be neglecting this area here. And on the other hand, a possible rise of the index above the 107.50 would be another indication for such a rise. On the other hand, we have to note that a colleague indicated a different course. For example, he mentioned the possibility that the upward trend line is actually placed here, as this stabilization has broken it, which is also a very valid comment in my opinion. And the current stabilization has broken it, so we may be expecting a stabilization between the 107.50 and the 105.55. So, to sum it up, we may see a stabilization of the index. We would expect in such a case the index to remain between the 105.55 and the 107.50. On the other hand, given that the RSI indicator is clearly above the reading of 70 and has some substantial room between its price action and the upper Bollinger Band, we may see some bullish tendencies once again. So that should not take us by surprise. I would note though that the fact that the RSI indicator is above the reading of 70 could also imply, or if you prefer, signal a warning that the index has reached overbought levels and may be ripe for correction lower. Should the bulls actually take charge once again, we may see the price action rising, breaking the 107.50. Actually, we would require such a breaking to switch our bias for sideways motion in favor of a bullish outlook and start actively aiming for the 109.50. Mind you, and that's something which we should take notice of, is that the index has reached record high levels and that may be causing practically, I would dare to say, some cold feet for the bulls. The bulls may start becoming a little bit hesitant, and buyers may have start thinking that, okay, maybe we overdid it a little bit. Nevertheless, on the flip side, should the bears take over, we may see the price action dropping. Definitely, we would require clear breaking of the 105.55 support line in order to switch our bias to a sideways movement in favor of bearish outlook. Should the bears take over, I would expect the price action to start actively aiming for the 103.20. However, to do that, we would expect the RSI indicator to break the reading of 70, possibly breaking also the reading of 50, and start aiming for the reading of 30. Let's have a look now for Euro USD. USD, which has been dropping. And has dropped below the 1.0210, yet seems to be showing some signs of stabilization, which should not be underestimated. So we are going to be switching the 1.0210 from a resistance, from a support line to a resistance line as the price action has broken below it. There you go. Let's go hunting for another support line. This time being placed at 9. And green. Okay. We're in the weekly chart now. And I would drive this. This used to be support level at 0.99 back in 2002. In September, I would be driving it a little bit lower. Somewhere here. Let's magnify it a little bit. Yeah. That'd be an interesting level. Drilling back down to the 4-hour chart. Zooming out. Readjusting. And we have the 0.89870. Even a little bit lower. Let's make the corrections in the labels. $1.048 here, final resistance line. The second resistance line being placed at 1.0355. The first resistance line, which used to be support line, the 1.0210. First support line is now placed at 1.01. Second support line being the parallel level. Note how the price action is getting closer and closer on a step basis practically to the parallel level. Mind you that the price action has now reached practically a 20-year low. And below that, we note also the 0.9870. There you go. Now, despite the recent stabilization of Euro USD, I would see the case for the downward movement to continue, given that the RSI indicator remains below the reading of 30, despite some slight correction higher. And should the bears maintain control as expected, I would expect the price action of Euro USD to start actually aiming, if not breaking, the 1.001 and take aim of the parallel level at 1. It's extraordinary, it's surprising how fast the situation can change. A month ago, we were talking about 1.08 when thinking about parallel level at 1. And here we are. Okay, let's have a look now at the pound, GBP USD cable to be exact. Now, cable, before we start, I would like to make a small note about the fundamental situation in the UK. It's characteristic that there are extensive rumors in the market of the possibility of Prime Minister Johnson resigning. In such a case, the Tories may still be able to elect a new Prime Minister, the Parliament. We will have to wait and see in such a case who comes out. There have been some names surfacing here and there, but nothing certain yet. For the time being, the outlook for the UK economy remains dark. Maybe not as dark as the European one, but still pretty dark. And the political uncertainty in combination with the possibility of stagflation could be troubling for pound traders. Nevertheless, for the time being, pound traders seem to remain optimistic. It's characteristic that the price action of cable has been on the upside. That should be since the late American session. Let me have a look. Yeah, since the early American session yesterday, and is now testing the downward trend line, which could be shifted a little bit to the right. There we go. So we have a clear touch here and here. I would be excluding this one. For the time being, we tend to maintain a bias for a bearish movement as long as the price action remains below the downward trend line. We must note here two elements. A, the price action is fast approaching the pre-mentioned downward trend line, and it's going to be putting it to the test most probably. Now, should it be broken, should the downward trend line be broken by the price action, initially we would expect bias for a sideways movement to dominate between the 1.2070 and the 1.1935. The second element I would like to note is that practically the RSI indicator is still below the reading of 50, but it's rising. And that's an indication that the bears are losing steam. So we may see the upward movement of cable intensifying somewhat in order to break also the downward trend line. Now, should the bears remain in charge and the pair practically finds resistance at the downward trend line and is forced lower once again, we would expect the price action of cable to break the 1.1935 and start actively aiming, if not reaching, the 1.1885. Remember that for the downward trend line to be still active, we would require definitely lower peaks, but we would require also lower throws, and hence we would expect the next throw, if the bears are to continue to dominate, to be below this level here. Should there be a sideways motion, I would expect the price action of cable to break the downward trend line as mentioned and remain between the boundaries of the 1.2070 resistance line and the 1.1935 support line. For a bullish outlook, we would require a clear breaking of the 1.2070 resistance line and the price action of cable to actually start aiming for the 1.2175. So it would be a line like this. It will not be so linear, but overall that would be the direction. Quite interesting chart. Okay, let's move to the, by the way, being cable. There was something which I have forgotten to tell you. Note the daily chart and the weekly chart. There is intense downward movement practically since the beginning of the year. And that could be actually since the 20th of February. Yep. And that could be practically another indication that the bears may remain in control. By the way, note that it's the second week where the price action of cable is about to end in the reds. There is still the US employment data which are to be released tomorrow and could distort the picture somewhat. However, on the flip side, should the report be favorable for the USD, we may see the pair cable dropping even further. Let's have a look at USD JPY. USD JPY, actually the JPY as such has proven to be quite resilient. It's characteristic that JPY, you can see it on the chart, the 4-hour chart in front of your screens, has been in a sideways movement against the US dollar. A US dollar which, mind you, has been strengthening. So that would imply practically that the JPY has been strengthening in parallel. The second which we would like to mention is that JPY has been strengthening and actually has been gaining against the euro and the pound. So overall, it would seem that the sideways motion is about to continue of USD JPY. Let me readjust the levels once again. And that would be a sideways movement between the 136.75 and the 134.45. I'm going to be deleting this level. Or actually, let me hide this as an axis of the price movement where the price action 135.60 there we go. And let me make the readjustments here. 140. $138.80. And the first resistance line being placed at 136.75. Note how the price action of USD JPY has been moving in a sideways motion, practically revolving around the axis of the 135.60, and that's been since the, there you go, 17th of June. We tend to maintain a bias for a sideways motion between the 136.75 and the 134.45. Should the bulls take over and JPY advance to new highs, that would imply a strengthening of the US dollar, yet would require possibly also a weakening of JPY. And in such a case, we may see the pair breaking the 136.75. That would be a prerequisite for us to switch our bias for sideways movement in favor of a bullish outlook and start actively aiming for the 138.80. On the flip side, should the bears take over, I would expect the price action to break the 134.45 and start aiming for the 133. The RSI indicator below our forward chart seems to be placing some distance from the 50 basis points level. On the other hand, I would be noting that the Bollinger Bands remain pretty narrow, indicative of the low volatility, however have started to have an upward slope, but that should be expected. I would require clear breaking of either the R1 or the S1 to change our bias for sideways movement. Let's move now to USD CAD. Sorry, that's AUD USD. USD CAD is here. Let's make the readjustments once again. There you go. Now USD CAD seems to have stabilized. That's pretty interesting. The pair has risen, broken the 1.2865, broken the 1.2970, hit the 1.3075, retested it. And during today's Asian session, late American and Asian, early European sessions, has more or less corrected a little bit lower, but it's just a bit lower. It's not like we have a new bearish tendency or is as if the pair is trying to lose some ground and the CAD is strengthening. I would see it still in the range between the 1.3075 and the 1.2970. Now, to switch my bias for sideways movement, I would require clear breaking in favor of a bearish outlook. I would require clear breaking of the 1.2970 and for USD CAD to start actively aiming for the 1.2865. Sorry, 1.2865. On the flip side, should the bulls take over, I would expect the pair to rise, break the 1.3075, and start actively aiming for the 1.32. The weakening of the CAD or the strengthening of the USD, take a pick, both occurred, so practically we had a divergence which made the movement more intense. However, for the time being, there seems to be some stabilization as the market digests the news. Quite interesting. Let's have a look now at AUD-USD. Also, AUD-USD seems to be remaining in a sideways motion between the 0.6850 and the 0.6750. Let me zoom out a bit so we get more history. It's characteristic that the pair tested extensively the 0.6761, 2, 3, 4 touches. I would dare to say that the bearish tendency may be over, at least for now. It could resume at any given moment. However, the rise also of the RSI indicator and just breaking above the reading of 50 tended to imply also that the market sentiment, the bearish market sentiment, is over. I wouldn't be surprised to see the pair remaining between the 0.6850 and the 0.6760. That would imply practically a bias for a sideways motion. Should the bulls take over and the extensive, or more if you prefer, the slight bullish movement be extended, I would expect the price action of AUD-USD to break the 0.6850 and start actively aiming for the 0.6950, which was extensively tested here, 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 as a support line here, once again here, and as a resistance line here and here. To the downside, and should the bears take over, a prerequisite for a possible bearish scenario would be the price action to break clearly the 0.6760, which was tested extensively once, twice, 3, 4 times, and start actively aiming for 0.6620. Let's have a look now at USD-CHF as well. USD-CHF, which is still rising, and it's actually marking higher highs, higher peaks, and higher lows. I would be seeing some stabilization here as the latest peak has not surpassed the previous one. I would expect it to touch the 0.9765. Let me make a readjustment here. There you go. So we may be seeing some stabilization for the pair. However, the RSI indicator is quite high. It's almost at the reading of 70, implying a bullish sentiment of the market. And should that bullish sentiment actually maintain control over the pair USD-CHF, remember this is the 4-hour chart, we may see the pair rising, breaking the 0.9765 resistance line and start aiming for 0.9875. To the downside, and should the bears take over, I would expect the price action to break as a first sign of a trend reversal, the pre-mentioned upward trend line. However, I would also require clear breaking of the 0.9640. That would be a second signal that the price action has started to move in a bearish momentum, and USD-CHF to start aiming for the 0.9550. Should the price action actually drop, breaking the upward trend line, let me readjust this, like this, yet stabilize between the 0.9640 and the 9765, or if you prefer, if it drops and breaks the upward trend line yet fails to drop the 0.9640 as one support line, that could be an indication of a sideways movement between the pre-mentioned levels, the 0.9765 resistance line and the 0.9640 support line. Let's also have a look now at Kiwi. Kiwi, which has moved decisively lower. You may see the downward movement intensifying if, there you go, if we see that the downward trend line has become more steep. Let's delete this. On the other hand, though, we have to note here that the RSI indicator has risen and has reached the reading of 50. So the bears seem to be losing some steam here. And we may see the reversal of the trend coming, possibly stabilizing the price action somewhat, or even showing some bullish tendencies. However, before we discuss all that, let me make the necessary adjustments in the support lines. It would be nice to have and this could go lower somewhere here. Let's find new support lines. Daily chart. Whoa. Bug up. Four chart doesn't allow us, so let's move through the daily chart here. This level has to go further low. Nice touch here. And there is another touch right here. So we have a new support line being placed at 0.5990 and the S3 green, please, double please. Let's being placed at 0.5920. Let's readjust. 4-hour chart. Nothing like this. This is too wide in my opinion. Let's have a second look once again. No, it seems valid. You have the touches. This could be lower, but now we have to compare which is the most valid support level. I think that would be the case. It's the freshest level we have. Maybe just a little bit lower here. Okay. 4 chart, just correct. Let's lock this in at 0.6120. Readjusting. Let's also correct the labels, please. And that would be the final resistance line is being placed at 0.6365. The second resistance line being placed at 0.6290. The first resistance line being placed at 0.6215. The support line being placed at 0.6120. The second support line being placed at 0.5990. Final support line being placed at 0.5920. Now, for the time being, we tend to maintain a bearish outlook for the pair as long as it remains below the downward trend line, which has intensified or has become more steep. That was on the 27th of June. On the other hand, we may see the price action actually breaking the downward trend line, yet remain confined between the 0.6215 and the 0.6120. That would be a signal for a sideways movement in our opinion. Should, on the other hand, the price action be able to successfully break the pre-mentioned downward trend line, break also the R1 0.6215 and test, I wouldn't be satisfied with a mere aiming. I would require clear testing of the R2 0.6290, if not even a break of that, for me to switch my outlook in favor of a bullish one. Please note that the RSI indicator below our 4-hour chart is on the rise, which could also imply that the bears are losing steam and actually the bulls are gaining. And that should be about it. Let's have a look now at gold's price. Gold's price, which has dropped considerably over the past few days. Let's make the necessary adjustments. Somewhere here. I'm going to be tightening the boundary somewhat here, as I want to practically allow for less volatility. Let's have a look. Okay. This 2 seems to be standing at green 17.15. Okay. No. So let's make the necessary adjustments, with the S3 being placed at 1.1700 actually, green. $50, $52, second resistance line being placed at 1770. Final resistance line being placed at 1785. First support line being placed at 1731. Sorry about that. Second support line being placed at 1715. And the final support line being placed at 1700. Let's make the readjustments. There you are. Can delete this one. So overall, A, there was a steep downward movement of gold's price, which was characterized practically from a downward trend line, which seems to have been broken. On the other hand, though, that would be suggesting practically that we switch our bearish outlook initially in favor of a sideways movement between the 1752 and the 1731. On the other hand, we note that the RSI indicator is below the reading of 30, and the slight rise it had shown seems to have been dented. So we may see some bearish tendencies reappearing here, in which case we may see the price action once again dropping and gold's price breaking the 1731 and start aiming actively for 1715. On the other hand, we have to note that the price action is already at very low levels for gold's price, of gold standards, and bears may have some cold feet on this one. On the flip side, should the bulls take over, we would expect the price action of gold's to break clearly the 1752 and start actively aiming for the 1770. But for the time being, I would still remain on a bias for a sideways motion, however, with the warning of some bearish tendencies, especially in the American Open probably. We'll have to wait and see here. Let's have a look at WTI. No, there seems to be a correction, isn't there? So WTI also dropped quite heavily. It seems to be correcting somewhat here. It is. Let me readjust this one, the final support line as well. Note how the price action of gold had almost reached the 92.60, corrected higher, second attempt corrected higher, and there seems to be some kind of stabilization above the 95.70. Mind you that the RSI indicator below our 4 chart bounced on the reading of 30 practically and is slightly rising. Yet there could be some bearish tendencies as well here. Quite nice. Should the bears actually take charge of gold's price, of WTI's price, we may see the price breaking the 95.70, testing if not even breaching the 92.60 and start aiming for the 87.20. On the flip side, should the bulls take over, we may see WTI's price approaching once again the 101.25 resistance line, which used to be practically a support line and has now been turned into a resistance line as the price action has moved decisively lower. I would like to see also some US stock markets before I leave. Let's have a look at US 30. Nice sideways movement in the 4-hour chart. We have practically a range-bound movement between the 31,345 and the 30,625. Should the bulls take over, I would expect the price action to break above the 31,345 and start aiming for the 31,955. On the flip side, should the bears take over, I would expect the price action to reverse direction, break the 30,625 and start aiming for 30,625, which provides support here. Mind you that the RSI indicator has been on the rise. Actually, there's a very subtle slope upwards, but it's still present. So we may see the bulls here gaining some momentum and slight bullish tendencies. May have slightly the upper hand, but for the time being we tend to maintain a bias for a sideways movement until the R1 is broken, clearly broken, which could enable us to switch our bias for a sideways movement in favor of a bullish outlook. I suspect that we will have a similar picture also with the S&P 500. Let's have a look. Yep, here it is. It's almost identical. Okay, the price action here has broken the upward trend line, the upward resistance line, placed at 3,855, but the picture has not changed. Sideways motion with some slight bullish tendencies guiding the index higher. I would require to see though a clear breaking of the 3,855 before switching my bias for sideways movement in favor of a bullish outlook. I would require actually the index to start actively aiming for 3,950, which it had tested once on the 27th of June and the second time on the 28th of June. Let's have a look at the third US index for US stock markets. That would be NASDAQ. Now here we have a different picture. And the difference is that the rise is steeper. It's characteristic that the price action has broken the 11,730 resistance line, which we have now to turn into a support line. And is starting to aim for the 12,245. Also note that the RSI indicator is above the reading of 50 clearly, implying some bullish sentiment. So there seems to be increased optimism in NASDAQ in comparison to other sectors. Should the bulls maintain control, we wouldn't be surprised to see the price action starting to approach the 12,245, which provided resistance here and support here. Overall, that should sum it up for the day. Hope you enjoyed the report from all of us here at IronFX. Best wishes for solid trading.
Hello everyone, my name is Emily and welcome to our daily trading tips. The New Zealand dollar, or as it's nicknamed, the Kiwi, is considered a commodity currency. What's so interesting about the Kiwi? Well, despite New Zealand's economy being of moderate size, its currency is one of the 10 most traded currencies worldwide. New Zealand's economy has strong ties with the neighboring Australia, China and the US, and relies on the services sector as well as the agriculture sector. Financial releases of interest for Kiwi traders include New Zealand's inflation, GDP, trade, and employment data, as well as the price of dairy products. On the monetary front, the Reserve Bank of New Zealand is calling the shots and has a dual mandate to watch over inflation as well as unemployment. In forex trading, the Kiwi is often paired with the Aussie and the greenback, yet other pairs such as GBP against New Zealand dollar are not uncommon. USD against CAD is a widely traded forex pair and justifiably being characterized as one of the majors. Technical analysis of USD against CAD shouldn't differ much in comparison with other forex pairs. On the fundamentals of the USD side, you have to note the financial releases of the US economy, as well as the greenback safe haven qualities, along with Fed announcements and the unpredictability of US current events. The CAD, or if you prefer it by its nickname, the loonie, besides Canada's financial releases and Bank of Canada's decision affecting it, presents also twist. The CAD is a commodity currency, as the Canadian economy relies substantially on the exports of oil as well as natural gas, which are some of its main products. The CAD may prove very sensitive to any fluctuations of oil's price. A rise of oil's prices tends to support CAD and vice versa, creating a positive correlation of the two trading instruments. Thank you so much for joining us today, guys. Stay tuned for our tomorrow's live. Bye-bye.